Welcome back to the Inorganic Podcast. I'm Christian Hassold.
And I'm Ayelet Shipley, and we are talking about all things inorganic growth in agency and software.
From market trends to deals that are getting over the line, we're your go-to team, pulling back the curtain on everything from deal strategy to execution. Let's go. We're in the company of somebody who's done pretty cool things, Ayelet.
I know we found out one really interesting fun fact, and I know that everyone gets asked like, "What's their fun fact?" But Chloe, we're gonna put upon you that we think this is a really amazing fun fact. We found out that Chloe has written for one of the presidents in the writers' room. So please enlighten us. Tell us more.
Dish.
All right. Well, I will keep it higher level, but interesting. So I started my career as a writer and a creative director for agencies for big brands. And I had this change of path where I was like, you know what, I'm going to hang up the metaphorical cleats and go to business school and kind of make this shift in my career. And during that time was one of the big elections in, was it 2020? And I just felt like I had this calling, and I saw someone was recruiting for the writers' room for the political campaign. I was like, I don't really have any experience, but they're like, yeah, we're trying to hire agency people and build this covert, like a super group, like not typical campaign writers and advertising. So I was like, I don't know, I'll just write something weird and send it to them. And I was in business school at this time, so it was just like, I was like, yeah, okay. And then I ended up having to do an interview. You have to do like extensive background check, of course. And then just getting the job. So it was me and about 5 other creatives from across the country who had like deep agency experience. But it was pretty wild because, I can tell you, when you work for an agency or a brand, when you pitch an idea, you're like, all right, here's the ones I know they'll buy. Here's the ones that I know they'll never have the budget to do. And then you kind of like just picture that, but you always throw one of them just to like twist their fancies a little and just get them excited. So I'm writing these scripts. I'm like, I'm going to write one with the most expensive song I can think of. It was like a Jack White song. And I just like threw it in. It was like a Monday night, I'm like shipping this off at like 1 a.m. By 6 a.m. I like wake up, I look at my phone, and I have something on my calendar, a meeting with Jack White, and we're talking about getting the rights to make the spot like in 2 days. So it was just a totally different experience. The amount of reach and money and infinite pool, but it was a pretty wild experience, I'd say. It was short-lived. It was only 2-3 months, but I mean, the pace that you're doing things, it was very exciting. But then after that, I really retired from the creative side.
I don't know. You have like a light in your eyes about it. There might be a future in this.
For which administration?
It was for the Biden one. So it was for the 2020 election.
Okay, cool. And you got a Yankee White clearance?
I don't know about that, but they would send me just like reams of like all the speeches that he was going to make, and I'd have to like pull things. It was almost like a research exercise too. They're like, we need a campaign for Georgia about this, and you have to just like learn and like write something like just in this. They were like, we want 15 scripts in 4 hours. It was like mania. I was like, awesome. I don't know how anyone does this because it's like you have to do like speech writing part of it. It was kind of wild.
All right, friends. Well, we do have a creative on the podcast today. We're going to welcome our guest, Chloe Cotoulas. She is an investment banker with Everos Group. She has a broad experience, as we've just heard, spanning advertising, banking. She was creative director for a few great brands like Microsoft, Coca-Cola, Samsung, Whole Foods Market, so on and so forth. She's got a really incredibly diverse background, and that background spanning, banking and agency and actually operating in this space is one of the reasons why it would be great to have her on the episode. Chloe, welcome to the Inorganic Podcast.
Thanks, Christian. Thanks, Ayelet. Super excited to be here.
Amazing. So I would love, like we gave a little bit of your background and we obviously heard that really fun tidbit at the beginning. But is there anything else that like what are the ways in which you got from, the beginning within like truly being within the brands to where you are today in M&A? Like how did that really come to be?
Yeah, I started my career like as far away from investment banking as possible. I think people always think I'm kidding when I start like my career path. I'm like, yes, I started as a writer, making spots, but I worked for these big agencies out in LA and for the big brands. And as you kind of accelerate in your career, the people that you're working with like the CMOs, the VP of marketing for massive companies. And, I really like the creative part, but, as you get more up the ladder, what became more and more apparent to me was they were so focused on just the business levers, right? And I thought, if I understand that part of the dynamic and I can pitch things, understanding that business capacity, I'm going to be like the next David Droga. Right. And at the same time, you saw consultancies starting to buy agencies. So, I started seeing this interesting convergence of like creativity and business. So I had this thesis. I was like, okay, well, why don't I go to business school, balance that out, and kind of be one of the only creatives that can like, kind of fluently navigate that sphere. Right. So when I started going to business school, I was like, okay, I'm just going to like pop back to the agency side. But then the more that I learned, like very unexpected, that I really just fell in love with the world of like finance and investing and just understood that like there were just different tools to solve problems. Like what I always loved about advertising is you're taking a very specific business problem and trying to come up with the most creative solution possible. Right. And when I went to business school and once you started learning accounting and, the corp and like the corp finance and investing, which was a whole nother ballgame that I got into, it's just different ways of seeing world and just being able to connect more things. So immediately after business school, I actually started working for a hedge fund where it was it was people are like, well, that's crazy. It's so far out. I was like, well, the way you make money investing is by not thinking like anyone else. Right. I wasn't like some guy who worked at Goldman Sachs for 2 years and got his MBA, had this very traditional path and traditional way of thinking. So for me, I was like, oh, wait, you don't think like anyone else? You can make us money. Great. So I started doing that, and that's where you'll see my like obsession with the public market still very much lives. And then after that, I had met the CEO for an investment bank, realizing like that I had these two very deep knowledge pools, and deeply in finance and then in the marketing media space. He was like, well, why don't you come over to banking and kind of merge it together? And that kind of led this third stage of my career where I'm at now. And that's what I'm doing.
That's incredible. I have a deep appreciation for divergent thinking and the way in which you then can approach a more traditional finance, sector of in business and how you take the background of what you've done. Now that you're in the banking and you're taking these, agencies to market because you do a lot of work within the agency sector, how does your background shape how you evaluate these agencies? Is it any different than what you typically see? What would you say is?
My firm at Everos, so I'm one of three partners, and one of my other partners also has pretty deep agency operational experience. And I think what we do very differently is we spend a lot of time doing like the strategic positioning of our clients, really understanding the ecosystem, the different drivers. As you see, we spend a lot of time studying the capital markets as well, public markets, and understanding these trends, and we almost come up with our own thesis in the space and then kind of and being very selective about who we represent and find the people that we think are capturing a lot of these tailwinds, and we'll position them. And I think, we've grown within the investment community where people actually reach out to us to help understand what's going on and where, investment dollars are moving. So as an advisor, the fact that we can come in and really intimately understand our clients, not just from the lens of a banker and understand their financials, but really understand what are the different drivers of that ecosystem, and for them to not just be successful today or tomorrow, but in 3 years from now. So I think that's where we're a little differentiated. And we've been very fortunate to represent really, I'd say, like the leaders in their respective spaces and some of the coolest companies frankly, that I think are out there.
This is super helpful context. Thank you so much for all that background. I think what I want to do is maybe start at the absolute top of the market around the macro environment. We've got the IPG Omnicom merger just about to get its full sign off, and I don't think there's any more blockers in the way. And meanwhile, across the pond, we've got our friends at WPP going through, some open questions around what might happen. Like, is there there's rumors about potential combination of WPP and Havas backed by Apollo or KKR. I'd love to get your perspective on sort of the evolution of the larger holdcos, and as a follow-on to that, what impact you think it might be having on large-scaled independents.
Well, I got a notification about 20 minutes ago. It looks like Wednesday's the day that IPG Omnicom merger is going to be finalized. So that, I mean, when the news came out for that, that just had like earth rattling kind of impact across the space where, I think that deal really is emblematic of the fact that the scale is really important, and that the way that the holdcos have been and have been so dominant historically is no longer the case. I mean, you look at their valuations, you look at their stock performance, there's something gone awry there. And I always think about, if you look at the holdco landscape, you have Publicis, who's just pulled away in every aspect. They invested earlier and more in data, in technology, in identity management, all of that, and really started to shift their business model more into a tech player. And they did that early, and then AI just has compounded that advantage. So they were, higher margins, higher growth. They're taking people, they're taking clients from the others, right? Then you have the IPG Omnicom realizing this growing divide and joining forces. Really, I think one of the biggest factors is joining a balance sheet, right? Because right now, the way that the holdcos are set up, they're pretty bloated. They need to simplify their businesses.
Yeah.
But also at the same time, invest very thoughtfully and strategically into what that future looks like. Because, we'll probably talk about this later, but I think probably the two huge tailwinds and just evolutionary factors are AI in the environment, but then there's also, the way that social culture communities are really so much evolving and much more coming to the forefront. And you have these legacy holdcos that are, increasingly less cool, less up to date, and then they don't have the technology. So that, you have the Omnicom, the IPG coming together, which is creating the waves across the industry, right? So you have WPP, who used to be the largest in the world. And I mean, their stock price has fallen something like 60-70% year to date, which is unheard of. Their stock price is back to where they were like 2 decades ago. And they're at this real crisis point. And, you've definitely seen there's kind of blood in the water now. People are starting to swirl. The first murmurings we heard were this summer with Accenture, sniffing around, maybe around a partnership or so, but that was kind of the first indication. And about a week ago, we started to see a bit more, right? You started to see the big private equity players. You have Apollo and KKR kind of kicking the tires a little bit there. KKR, you have to remember, bought FGS, which is the big PR firm from WPP last year. So they're no stranger in that territory. And then, of course, Havas, the big French holdco, and just at the end of last year, they spun out from Vivendi, which is like the French multi holdco, just conglomerate. So, there's a lot of different players out there. The really interesting thing, and, Christian, to get back to one of your questions, is the enterprise value for WPP right now is about 8.8 billion. But if you look at WPP Media, where analysts are projecting what the value of just that core business, removed of all the creative, it's more than the enterprise value of all WPP. So this kind of asymmetric opportunity, that's why you have like private equity firms like swimming around being like,
wait, the reported enterprise value of just Kantar was 8 billion. Like, isn't that roughly what the totality of Kantar was? Because it's a JV between WPP and I think Bain owns the other half or something like that, right?
Yeah.
So that's actually crazy because WPP owns half of Kantar.
Yes.
Less debt, right?
It makes no sense, right? Because the stock is being weighed down by, I personally just don't think the Holdcos trade very well. As like a former analyst in that space, it's really hard to value that kind of company. The public markets really value things where there's clarity, easy to forecast.
Yeah.
And analysts, how are you doing like 47 different agencies and like business models to forecast is really difficult. So they already trade a little bit at a discount. So when you think about what sits inside WPP Media, I think they manage something like $60 billion worth of media. And so it's like really when you start to do the sum of the parts, it's their valuation, the way it sits right now in the public markets, is so lopsided to the true value. So, I mean, there's a few options what can happen with WPP, right? There could be, they have the full takeover, right? Where, they sell themselves. I think that's a lesser likelihood scenario that someone would come in just for the whole takeover. I think probably a higher likelihood option is maybe there could be someone starting to build like a minority share, being that it's a public company, being that the stock's very lowly priced. Avast could start building a position, one of the private equities. The other thing is they could just start selling off pieces, right? They could sell off the media part, or they could do just a simplification and start selling off all the other assets around it and make WPP there's rumors that they might get kicked out of the FTSE. They're in a pretty dire place. I think another option, like Accenture poses an interesting option for this, for just more of a partnership kind of dynamic, right? Where they're not totally, but they could give Accenture access to so much of that media buying. You would see something like Deloitte Digital, who you haven't heard from in a while.
I think the risk of them divesting their media arm is like, it's probably the only thing that holds them together, to be honest. So it's a very risky, but maybe if this kind of macro has a downstream effect on the rest of the market. And I think a good place to kind of transition this to where I was asking about as a secondary part of the question is, what impact does this have on large-scale independence and then ultimately sort of the ecosystem that feeds? So we want to like create a little context for this, and I'll let my friend Ayelet kind of take it, which is, all right, so I'm a hustler agency founder. I built a business off of a couple of clients, turned it into a 50 to 100 person agency. I'm bringing in 20, 30 million with 40% EBITDA margins. If I'm running it really, really well, I might get acquired by a scaled independent agency. And then where does that agency go? I think the question that this brings to mind, which is, it used to be that the holdcos were sort of the end all be all for where the exit is going to be. Who is the strategic acquirer of the future that's going to pick up these big pieces, or like what is going to become of it? I would love your investor perspective of that. And then Ayelet, you can kind of take the follow on.
Yeah, Christian, you're asking the billion dollar question, probably. I was just talking with my partner, Andreas, here about that very thing, right? Because you're 100% right. It was always, you scale to kind of holdco status and you kind of get rolled into that because that was kind of the end all be all. But now, where does that go, right? So there's the private equities, more up, like higher market. So again, like KKR, Apollo are starting to look at the advertising ecosystem in a very narrow way. The only other option is public markets to list in that way. But like I said before, they haven't been super, super friendly to these. So I actually think the media landscape, Christian, you know this well, like early to 2020, 21, 22, there was massive investment in the media performance space. You had, W Promote, Tenuities, Power Digital, all getting picked up. And, I think with the ambition to try to punch up more higher market with more like enterprise, 2 degrees, I think, of success. And now where you're seeing this kind of turn, and this is why I think the public markets are such a great North Star to understand the middle and lower market, because now we're starting to see those players start to shift more into the tech realm, right? Like Tenuity just last week dropped, I think it was Ad Copy AI, right? It's a AI system where, thank God I'm not a copywriter anymore. I looked at that and I was like, woo, dodged a bullet on that one.
Yes, you did.
I mean, it writes the copy. It like A/B tests it and then swaps it out in real time. And they built it with Google. So just imagine the data and knowledge that they had when building that out. And they're saying it already has 15% like improvement of performance. So I think continue to see that evolution next into more of a tech company. And then when you think about the investors, if they can successfully bridge that divide and become more reoccurring revenue, that actually brings in a different cohort of private equity firms that previously didn't like the agency space, because it is much more project based, not that like SaaS kind of model, but they're moving that way. We saw Stagwell this quarter announce a massive partnership with Palantir. The stock went up 30% on this. It gave it back in like 2 days, but the stock went up 30% based on this announcement, because they're creating this, Mark Penn called it like the holy grail of advertising. Palantir, for anyone who doesn't know, does like AI for the military. They're like, their stock has gone like bananas in the last like 2 years. But what the market's reaction, I think, tells you such appetite that there is to see this evolution of the marketing space, the move towards, a much more tech-based model, a much more SaaS-based model.
It's really interesting. And it's really interesting also for like founders that are listening right now too, because, as we've explained before, like you have the whole ecosystem of how this all plays together. And a lot of who our listeners are a lot of the founder-led agencies too. So for them, as they're looking towards their future and what they're seeing, and like, what are you hearing from them as they're approaching you, as they're going to sell or they're thinking about going to market? Where is their headspace at? And then like, what's the advice that you're like, where are you telling them that this is going and what they should be acting towards?
So I'll tell you, probably every single process I've ever done, the founders come in and I'm like, I'm not selling to the Holdcos. I think people always, part of, the ethos of you as a founder is like, you're building something, as a foil to whatever the Holdcos were. So, I think they're against it but people change, right? That's our job as a banker, is to kind of open that perspective. And I've seen people who really didn't want to go for a Holdco and did sold, and they're doing amazing within that kind of ecosystem.
Can you just double click on that? Like, why are they doing amazing? I think this will be good for everyone to hear.
Yeah. So I think there's certain kind of founders and people that, if you're a smaller agency and you get sold to a Holdco and you're still in the early stages of your growth, there's a lot of doors they can open, a lot of connections. There's, a lot of mentorship too. You have, I joked about part of the reason why I didn't want to go back to the agency side. There's really like brilliant strategic leaders within the advertising space, right? As a young founder, to kind of have access and be, amplified on that podium and really elevated, for the right kind of person is very exciting. And you have this global corporation that can really just put jet fuel on what you already do.
Of the other transactions that you've been a part of recently, are there any specific ones that like have stood out to you that are telling us something different about the market, that we're seeing different trends come up?
Yeah, I'm just like obsessed with this one trend of just experiential coming into the forefront, and experiential and social. And I think they're very much in tandem. Right? I always joke when I was a creative, experiential was kind of like, you're like walking to the meeting and you're like, we need one more slide in this deck. What's a pop-up idea? We'll just like throw in like for fun. Right. And it was such an afterthought. Right. And seeing how these in-person immersive experiences have become almost central. Like you could build like communities of people, fandoms that you're tapping into. You look at Netflix building like the Netflix house, using its IP to create immersive and building a whole brand around that. I mean, every major brand out there has invested increasingly into experiential. And then when you think about, okay, you're building these in-person experiences, but they need to be able to be amplified across everyone else who's not there. So you need to be thinking social, experiential. So it's interesting. Over the summer, we advised on a sale of this company, Super Digital, a social first company that we sold to Accenture. And one of the things they kept telling us, they're like, hey, we're a social agency, but increasingly our clients are asking us to do the experiential. They're like, you get our audiences. Can you just figure out like how to be like with them? That IRL URL connection was increasingly in demand. And then at the end of last year, we sold a company, Dayon, which was an experiential agency. Shamrock invested in them, and it was the opposite. They were building these massive, very tech-enabled immersive experiences, and they're like, can you just do our social like channels too? So I think that is a space that's going to continue to evolve. I think people, after COVID, people are increasingly want those in person. But you think about like the hyper trends out there, sports. I mean, the hottest asset now of advertising you can invest in, these are in person, these are fandoms, all the IPs. People are so much looking for these communities of people and that you can tap into. And what like an experience does is lets you kind of engage in something and like co-create something live. So I think that's such an interesting space. We're seeing a ton of appetite for that right now, as just more budgets are being allocated to both of those that used to be kind of the spokes, now kind of sitting in the center, and you can build an entire marketing plan around that.
Yeah, I'm a big believer in that. We've talked about that recently too. And it really is going back to the trends, and everything plays off of each other, right? I mean, with the rise of AI and technology, with the world becoming, more technology dependent, and we are, fragmented as a world, right? We sit on our laptops and we can often sit. There is a bigger need for the community, for relationships, for in-person and experience, and whether you go and you are actually part of that, or you're then being able to tie that into how do you replicate that or identify it with that from a more virtual perspective, right? It's the rise of the experience in all forms, whether it be real life or whether it be virtually. And so that is a really interesting, I am curious, and I don't know if have ideas of how that is going to play into potentially like a consolidation, a roll-up formation. Like, how are we going to start seeing this too, besides for the like few notable ones that we've been seeing? Do you think this is like the next big one?
I think we're definitely starting to see private equity moving into this space and starting to try to build their own experience platforms, right? Whether, like I said, Shamrock, like I think an influential investor in the space, because anyone doesn't know, Shamrock used to be the former Disney family office as well. So they have a content arm. So they're very much kind of sitting at this cross section of entertainment and culture and music, and seeing experience as that one of those key components to that flywheel. And so they're starting to build their own platform. Goldman Sachs bought Tate last year, which is a huge experience. A lot of tech involved in that. They do a lot of like the concerts and technology and like the building bones of the experiential space. So I definitely think we're going to see some players rise out of that are really going to own this. Because also, again, as they with technology and thinking about experiences aren't just like pop-ups anymore, right? They're finding ways to use your phone to be more in the place, right? Imagine you like in LA, what they did at the Intuit Center, the new stadium, for when you're at a sports game, how you interact with the scoreboard. You could hold your phone and get more info, more personalized, and just changing the way people experience everything. Dayon was working with Meta, helping them build out, I'm sure you've seen the Ray-Ban glasses, and they're like, okay, what if rethink what a store looks like? Forget everything you see, about what a retail experience is, and think, how do you get people to engage? How do you weave technology into that experience of the try on, how they like move around the store? And you think about what that experience looks like. I think that is so interesting. So I think we're still in the early innings of what experiential and that intersection of technology, marketing, experiences still look like. And like I said, you're bringing in different investors too as you get more tech savvy and it starts to evolve what that landscape is.
So let's shift to Outlook. We're in Q4 and it's been kind of a busy Q4. Lots of post Labor Day mandates coming into market, lots of deal flow that I've seen as a corporate development operator and Ayelet's seen in terms of deal execution. Love to get your perspective on, what we should be thinking about in the next 2 quarters in terms of deal activity and deals getting over the line, and we'll just kind of keep this focused on the independents and below. The holdcos will be holdcos, but in the independent in the market where you the Everos team are operating, what do you see? What do you predict?
We've seen very good deal flow for this last year, and I think there's been acceleration through the year. I think people came in unsure of how the tariffs were going to impact their businesses, consumer appetites, and despite everything, I think the companies that have had the lead continue to grow, and I think those that were struggling struggled more. So I think we got a big separation of the winners and losers. For the ones looking to come to market, I think finishing 2025 is going to be really important because I think 22 to 23 we saw that divot in the market, right, where there was that massive spike and then like all the tech pullback, and I think everyone had a pretty weak 23. So kind of coming in, having that kind of that solid financial performance for 24, 25, good outlook into 26. I think that's going to be really important for people to sustain that. Again, I think figuring out that your AI story is critical. Even if you're a creative agency, maybe even more critical, really putting more Kevlar on how you're talking about yourself, how you're integrating AI and really identifying what's defensible in your space. What can AI augment and make better, and get to better, more creative ideas faster, test things faster, put selling something into a client is hard when they can't see. AI can really help sell in better ideas faster too, and you can iterate much faster. So really nailing that story, I think, is going to be important.
I think the one thing you touched on, the AI piece, is probably worth a double click. A lot of buyers are asking a lot of questions around AI, benefit to agency and AI risk. I think the risks are the interesting ones, which is like what work is going to be disrupted and made like not worth, what the value, the price might pay. So like being on the front lines of the deals, like what are the questions that are getting answered that buyers are getting over, and what questions are buyers not getting over in terms of AI defensibility?
Yeah, so you're right in the sense that like AI, I think what it starts to eat at first is the lower skilled replicable work, where the versioning, the all of that stuff that was kind of the low level production that agencies were charging hours and hours to do. That's the first to go. We're starting to see questions, and I can tell you some insight to our residents process. So residents, they're like a tech enabled like creative company. One of their biggest ones is Buck, who's very well respected in the space. They do a lot of animation visual effects. So overlay this timeline, Sora is coming out, Midjourney. People are seeing that you can do like beautiful, like you just can know like 7 words and type it in, and you get like actually a pretty good animation. So we're coming to market with that, and people are like, well, isn't Buck like a big part of the business? Aren't they just going to be the first to go, right? And really, what I encourage all the listeners out there, really think about how you're achieving that. For us, going back and then educating buyers about, okay, we get like you understand that you can just input things and get an animation. But what you're not seeing, there's a tremendous amount of technology underlaying that. And in order to achieve even what Buck is doing, they are using, I think, some of the most sophisticated AI and technology systems anyone's ever seen. In due diligence, actually, the tech diligence firm, and I always laugh about this, actually at the very end of the diligence where, they're really trying to get you, they're like, so would we be able to check back in like 6 months to hear what else you guys are doing? We're so impressed, right? So this was a company that the market at first was like, you're AI risk. But the way that they're getting to this amazing level of animation and creativity and building their own frameworks. So like I said, I think creative companies that are really embracing technology early and quickly to really compound and amplify what they're already so good at is going to be a differentiator. Like I said, I think taste, aesthetics, like AI can iterate and AI can replicate what you do. It can train off of like a certain aesthetic or something, but it really takes that those artists, the craftsmen, to imagine what it looks like next and keep like blazing that trail and using AI to like push everything forward.
I think prompt engineers is the new like high value hire at agencies. Like, how well can you prompt? There's a bunch of commercials that are made purely with AI out there. One of my favorite ones is Ritual Vitamins, the prenatal vitamins for women. There's one floating around on YouTube that was entirely created by AI in like a weekend. But it's like the prompt engineering work in of itself is, it's no joke to be able to do that, right?
Oh yeah, that's I guess that's the new copywriting. Now
that it is. Copywriters actually do have a future. It is in prompt
they just have to go into prompt.
Yeah, so you have to divorce yourself from being like on the billboard. You're gonna create the thing that even if billboards are a thing, I guess.
Well, we've covered a lot of ground here. We've talked about the macro market, the Holdcos, sort of how that is impacting independent agencies. We've talked a little bit about, the look forward environment for deals going into Q1 2026. Chloe, this has been incredibly helpful. Thank you so much for being a guest and coming on to share your perspective.
I appreciate it. Really enjoyed this chat with you guys. I always love the podcast. I always have great perspective. I always like to tune in and listen to what others have to say in the space.
And to our friends out there, thank you for joining us for another episode. We're so grateful to have you. If you enjoyed the conversation with Chloe, please like, subscribe, or share wherever you listen to podcasts. Until next time, we'll see you on the next episode of the Inorganic Podcast.